Alright folks, let's dive right into this news about Alibaba. On 23rd August 2024, Alibaba announced that they will be dual listing on Hong Kong Stock Exchange's main board starting on 28th August. This has got a lot of folks both in China and abroad wondering what this means for their Alibaba investments. The big question on everyone's mind is, will this new Hong Kong listing dilute or impact the existing Alibaba shares traded on the US stock exchange? And will Alibaba be issuing new shares that could reduce the value of the current US listed shares? And is the Hong Kong listing a good investment opportunity in itself? Well, I'm Sheila Wang. I'm here to update it on the most cutting edge and fresh business and investment information for you. So don't forget to smash the like button and subscribe my channel. I also welcome you to join the discussion in the comment section below. And if you are interested in a more in-depth investing report, make sure to check out my analysis report below. Now let's dive into today's topic together. Firstly, let's review our common sense. When a company does a secondary listing or share offering, it can sometimes put downward pressure on the stock price, right? That's because the increased share count can dilute the earnings per share. However, it's not always a guaranteed negative. If the share offering is well received, it can actually boost the investor sentiment and the stock price. And I think that's the most investors that holding Alibaba shares that worries a lot. But in this case, Alibaba is not actually issuing any new shares. They're simply dual listing their existing shares on the Hong Kong exchange. So for those of you holding Alibaba shares on the US exchange, you don't need to worry about any direct dilution or impact on your investment. Okay, my friend, the overall market reaction seems quite positive as well on this dual primary listing moved by Alibaba. That can be easily seen from the stock price. What's more, from what I can see, the Hong Kong listing could open up Alibaba to a whole new group of investors in Asia. This could provide a nice boost to the trading volume and the liquidity of Alibaba shares. Hong Kong is one of the premium financial centers in the world, so the Hong Kong listed Alibaba shares may become an attractive investment target in their own right. Another important problem, my friend. Why would they want to be regulated by two different authorities? You know what I mean? Well, the way I say it, even though it's twice the hassle, the benefits are double too. You see, Alibaba used to just have a secondary listing in Hong Kong. It's kind of like a side office, right? But now they're a dual primary listed company. That means they're the main show in both the US and Hong Kong. So even if there's some drama going on with their US listing, their Hong Kong listing can stay rock solid. And let's be real, the US has been really cracking down on Chinese companies lately. Alibaba's even back on that infamous, notorious market listing for selling counterfeits. There's even talk of putting Chinese firms directly under US legal jurisdiction. In that environment, going back to Hong Kong just makes sense for Alibaba's growth and policy options. Another sweet perk is that Hong Kong requires company to announce their buyback activity every trading day. So Alibaba's massive buybacks in the US will be super transparent and timely for investors. They won't be able to hide those shareholder rewards from the market. And for mainland Chinese investors, this dual listing is a game changer. It will improve Alibaba's shareholder structure. It will improve Alibaba's shareholder structure and then re-evaluate the company's long-term value, my friend. I'm talking potentially hundreds of billions in new investor capital flowing in by 2025. So yeah, this dual primary listing is a big strategic move for Alibaba, but it's not without its challenges too. And as we know, they've got 6 major business groups. If you follow my channel, and you can always get the latest information about these 6 separate business groups. From e-commerce to cloud to entertainment And some of these, like local services and entertainment, are still bleeding cash, even as overseas biz grows. Dual listing helps manage external risks, but they still gonna innovate and expand those underperforming units. With two regulators watching their every move, Alibaba's real gonna have to nail the operational and financial compliance. And that will be good for Alibaba's long-term run, right? But hey, this dual listing trend isn't just about Alibaba. Companies like ZTO Express, Boss Herring, and even Bilibili have joined the club. In fact, Bilibili saw its Hong Kong stock price surge 40% in just 3 weeks after getting connected to the Stock Connect program. So my friend, it looks like that Hong Kong's become the new safe haven for the US listed Chinese firms. The Hong Kong Exchange is even tweaking its rules to make it easier for these companies to come back. And with mainland stocks struggling, a lot of analysts are getting more bullish on Hong Kong stock market. I will probably do a video soon on this potential Hong Kong investment opportunity. If you're interested about that, just stay tuned, my folks.
Positive progress has been made in the core business this quarter. Tmall and Taobao Group's online GMV has grown steadily. Double-digit growth of public cloud business revenue. The related product revenue triple-digit
Taobao
growth.
Tmall Group, the market share is stable and the order volume has increased by double digits year-on-year. The increase in the number of buyers and the frequency of purchases. 618online GMV also has strong growth. 88 VIP memberships increased by double digits, more than 42 million.
Cloud Intelligence Group focus on public cloud plus AI. Double-digit growth of public cloud business. Related products continue to receive triple-digit growth. The number of paid users using Alibaba Cloud or platform billion increased by more than 200% month-on-month.
Hainiao Group, fulfillment solution of the construction logistics, drives the revenue increased by 16% year-on-year. Alibaba International Digital Business Group, the revenue increased by 32% year-on-year. The growth of AliExpress Choice business orders, Lazada's operational efficiency improvement.
Local Life Group, the revenue increased by 12% year-on-year. The increase in orders of Gaode and Ele.me, improvement of operational efficiency and business scale.
Great Entertainment Group, the revenue increased by 44%. Performance event online ticketing platform GMV and revenue growth.
So that's all for today. I hope it is useful as usual. See you next time.